Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the CBOE Market Volatility Index, aka the VIX. And I've left my lines on the chart from last week's report so you can once again see how accurate candle charting can be. Now, I'm starting off with the VIX because this is a leading indicator to the S&P, and it generally sets the pace for the rest of the market. So last week, you can see here, I drew my lines down in this diagonal line here, mentioning that I thought the gap down here, that's that price void, I felt that the price would move down to fill that gap, which it did that on Thursday right here, and then I drew that little tick mark right there, suggesting that after the gap would fill, we would see a little bit of a bounce. And that's exactly what happened. You really cannot get more accurate than what was put out last week. And all credit is going towards the candle charts because they're giving signals that are so clear and easy to follow that many other traders and investors are following the signals and reacting to them. So as you get to learn more about technical analysis, you too will have a tool that will help you forecast the market. Now that the forecast is complete and the projections were accurate, like I said before, I'm going to erase these lines, going to remove them, and I'm going to draw what I think is going to happen. This is called a hammer pattern. That's bullish. That's number one. Number two, 80% of the time after a gap fills, the market will generally reverse and go the other way. So I'm suggesting here that the volatility index could start to climb next week, which, remember, this is a contrarian indicator. So if the volatility index is most likely going to climb, that means the S&P will most likely drop, at least at the beginning of the week. So let's go to the S&P, go to the spiders, SPY, and I'll show you what we're talking about there. Again, my lines are left on the chart from last week. You can see this was my forecast. We went up exactly with that line. And then I felt as soon as we got to this point here, which was at the high from that candle back on the 21st of August, I felt that that would be a resistance area and we would pull back. That's exactly what happened. Now that the forecast is complete, I'm going to redraw this line. What I think is going to happen is we're going to continue to go down to at least this point, test this support level, and then there's a possibility we could bounce. Now, I'm not going to put that pivot point in there yet until we reach this support level. So there's a high probability that the market will drop early in the week, Monday and Tuesday, and then we will have to reevaluate from there. Moving on to the diamonds, which is the Dow Jones Industrial Average ETF, ticker symbol DIA. You can see again, the forecast was 100% accurate. This was my line that I drew, suggesting that we would move up this week. And then as soon as we moved up to fill this gap, hit that resistance, we would pull back. Again, it's so exciting to see how the candle charts will give us these signals and how well price action reacts to the signals. So I'm going to erase these lines and draw my forecast for next week. I'm basically saying that we'll continue lower to retest this support level. You see here is a little bit of a pivot point. So I'm thinking we're going to go down to that line and then we'll see whether or not we bounce. I think there's a good chance we could bounce after testing that support to refill this gap, and then we'll have to readjust our lines and move forward from there. But I would not go long. I would not take very big long positions here. I think the sellers are in control of the price action. The bears are in force, and you need to really lighten up on some of the positions if you want to reduce some of the risk. Now, the Russell 2000, it's a more broad-based index, ticker symbol RUT. You'll see that my forecast right here, I'll zoom in so you can see that more clearly. My forecast was that we would rally up to retest this downtrend line here. That's exactly what happened. We went right to that line. On Thursday, the Fed came out, made their announcement regarding interest rates. We had a little bit of market volatility. This long shadow above that candle, that vertical line right there, when you see long vertical lines at the top, that tells us the sellers are moving in. So I think what's going to happen is I'm going to erase this line here, and I think that we're going to pull back just like that next week. So beware. I would not suggest any new long positions there as well. This is a more broad-based index. It's 2,000 stocks that are being measured, and the sellers are in force. Finally, looking at QQQ, that's the power shares, basically representing the NASDAQ market. My lines are in place from last week. You can see I suggested that this role reversal resistance, which formerly was support, term resistance, would be the target price. And then once we hit that resistance line, we would pull back. Again, look how perfectly that is. Remember, I drew those lines last week before there was any price action. Now that we have determined that the market is reacting to these signals, I'm now suggesting that the Qs are going to drop to at least fill this gap right here and then possibly bounce off the support. So I'm going to leave that just like that. Again, last week I didn't have any price action here when I drew the line. This week, there's still no price action as I draw the line. It's up to you to follow along and see the price action after it's happened. And then after you see the evidence, maybe you'll realize how powerful these charts really are. If you're interested in learning more about charting and trading, just go to themarketguys.com. You can click on the video tab right there. It'll bring you to a video library that has many different what we call market shots that talk about the market. We have concepts and ideas for managing risk. I would suggest you go over this one. It's Trading the Gap. Very, very powerful. 80% of the time you could use these and make money. 20% of the time you won't, so you manage risk. That's why these two go hand in hand. When you're wrong 20% of the time and you minimize the risk, it's a numbers game. Right 80% of the time and you maximize your profits, you'll come out ahead almost every time. So that's the whole idea behind our video library, is to teach you how to trade. And then on Monday, we're having an open house. Again, go to the Market Guys front page, scroll down, and you'll see that we have our open house on Monday, 21st at 8 p.m. Just click on the registration link right there, save a seat, give me your stock symbols, submit your questions, and I'll analyze those and answer your questions. And we have an action-packed hour. I'm sure you're going to enjoy that. And we do this every single month. And it is for free. So invite your friends, family, participate, and we'll see you on Monday. Have a great weekend. So long.
For almost 3 decades, A.J. Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep it super simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. A.J. is a best-selling author of 2 books, The Market Guys 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. A.J. will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is A.J. Monty, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with two questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our Trade Alert services help answer these two questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have two services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for the Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you've taken the first step in the right direction. We look forward to having you as our newest member.